All right. Good morning. Welcome back here to Trader Minute. Great to have you aboard. I want to go take a look at the philosophy of a challenge trade and, some of the mentalities behind these, because this is where, to me, the challenge differs from just normal trading. Normal trading, we go, you assess the trade, you look and you say, okay, is the stock going to go up and down, up or down? If it's going to go up, I'm going to buy this. If it's going to go down, I'm going to buy this. And you sit there and you figure out where your stop is on your trade, where your profit target is on your trade, and you try to put all these kind of elements into it, and you execute the trade. And it's kind of in a vacuum. Some people like to run 10 trades, 20 trades, 5 trades, 3 trades, all those types of things. And, frankly, that's a nice strategy when it comes to trading stocks. When it comes to trading options, more specifically when it comes to trading options in a challenge format, that doesn't work. It doesn't make any sense. Because what would happen is if I assume that I can do that with 5 trades and boom, 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 I'm going to put all those parameters on all 5 trades. It doesn't take into account my overall exposure, doesn't take into account my risk, doesn't take into account how it all fades. It only takes into account probability of direction. And when it comes to the challenge, there's 3 main elements that we have to understand. Number 1 is that not all trades are made equal. Some trades we can look at and we say, you know what, if we make this, our reward is going to be X dollars. But if we go make this trade over here, our reward could be Y dollars. The rewards differ from trade to trade, depending on how options are priced, depending on how much movement you expect in the stock, depending on how much time there is in the trade. The reward can vary substantially, but also so can the risk. The risk varies substantially as well. And so, depending on how you're going to structure that option and how you're going to structure the trade, that risk versus reward matters. Why am I going to go risk 100% on an option for something that gives me reward potential of 50%? To me, doesn't make a lot of sense. So generally with challenge trades, we're looking for something where, you know what, for about 30% risk, we can get about 100% gain. For about 100% risk, we can get about 300% gain. In the market nowadays, it doesn't quite translate that well or with all things, as some of the overall movement has compressed substantially, but that's generally what we're looking for. Now, just because we have a really good risk reward doesn't mean that our probability of direction is very good. If I go buy a Powerball lotto ticket, my risk versus reward is phenomenal. I can risk $1, $2, $5, and make millions. Great risk versus reward. I'm risking a couple bucks to make millions. But what's my probability of direction? Right? What's the probability that it pays off for me? Well, it's very low. Right? It's very low. So we can go out all day in the market and with options, go find great risk-reward scenarios. But most of them, the probability of direction, there's just no real change, meaning it's 50-50 or 30-30, 30% up, 30% down, and 40% smack in the middle. In the current market, you could argue 60%, smack in the middle, and 20% chance of going up, 20% chance of going down. So, to find something where your probability of direction is very high, where you can say, you know what, I've got about a 70-80% chance of this moving my direction, and then combining that with an option that has good risk reward, well, that's a little bit more tricky. Or a little trickier. That is something where, I can go out all day and find decent probability of directions and then just look at the options and go, that doesn't make any sense because earnings are priced in or dividends priced in or, something else is going on where the option just doesn't make a lot of sense. So I need something with good probability of direction and something where the risk reward itself matches. And that's what makes a challenge trade, having those two things together. Now, the third thing with it is exposure. just overall exposure in the challenge. So when a challenge starts out at 3,000, the most I can put into a trade is 3,000. And if I go and I get a decent risk reward and I get a good probability of direction and I go put $3,000 into that first trade, what's my exposure? Well, it's 100%. Am I willing to roll with that with one trade? Typically, no. Why? Because I know that I can have the best risk reward and the best probability of direction, and we're still dealing with the real world market where things just sometimes happen. Things just sometimes go the opposite. There's news, there's unseen events that happen. There's a element of randomness in the market that I have to account for. And so generally what will happen, and one of the reasons we start the challenge with 3,000 is because we start with a low exposure and we earn the right to increase our exposure. We earn the right to increase that. And so we do that by having good trades that are profitable and that increase our exposure. Now, I'm going to pull over a picture here because to me this is a very interesting picture in regards to an option trade. There are a lot of option philosophies out there and market wisdoms out there. When it's up 80%, you do X, Y, and Z. When it's down 20%, you do A, B, and C. And I don't subscribe to any of it. I find it all to be fairly arbitrary, fairly ridiculous. And yes, in some circumstances, yes, it's applicable. In others, it's not. But generally here with an option, this is the case. Let's just go say you put $1,000 into an option, right? And you wake up in the morning. And your option is now worth $3,000. You're over here on the high side of the teeter-totter. You have a lot further potential to fall, right? You can drop a lot further than if you wake up and your 1,000 turns into 500. You only have $500 exposure at that point. Where you wake up and your option goes to $3,000, now you have $3,000 worth of exposure. So by having that gain, you have a lot more to lose. By having the loss, you have a lot less to lose. It's a teeter-totter effect when it comes to exposure and options. And a lot of times option traders, they have option trades that get hit and they're down to low exposure. And, a lot of the market was, you just got to cut it. You can't go to 100% loss. Well, why? If my option, if I only have $200 risk or $300 risk left, and my challenge is worth $10,000, what do I have to lose by holding that? I have a lot more upside potential than I have downside potential. Where if I have a trade that's now $6,000 and my challenge is worth $10,000, well, I have a lot more exposure. I have a lot more loss potential with that 6,000 trade, even though it's a gain, right? And so a lot of option traders look at gain and loss, and yes, gain and loss matters in the ultimate game, but when it comes to how exposed we are, a gain increases exposure, a loss decreases exposure, which can alter decisions to be made on trades. And for me, it happens. It's not, it's not each and every trade, but there are some trades where I'm not up to my price target and I end up taking a little early because the option has done really well and I don't want that exposure risk. Or other trades where I plan to exit at a certain spot, but by the time the stock gets there, the option is just deteriorated in a way that, it doesn't make sense for me to sell it, especially since I'm expecting a bounce back. And if it does bounce back, my option is going to bounce back like a teeter-totter in a very big way. So I'll take that risk of holding it. And so exposure, along with risk reward, along with probability direction, are how I look at challenge trades and the challenge portfolio and manage the challenge game from those three perspectives. In every trade, I have a rough idea of my risk reward. I don't sit there and calculate it by 22.22 or 38.50 on the stock or 38.28 on the stock. The market's not that exacting, right? But I can get a general idea. of the risk reward based on the chart. Then I can look at the probability of direction. Where are my technical indicators? What do my fundamentals look like? How the sector flows? What's going on in the market? And I get a decent probability of direction. And then from there, I have to decide, well, how much exposure do I want? There are some markets where I look and I go, look, the probability of direction is really high. Meaning, earlier this week we talked about UPS, and look, probability of directions, UPS probably goes up. What's my risk versus my reward? It's just not very good. So if I'm wrong, I'm going to lose a lot more than if I'm right, because if I'm right, it's probably just going to trickle higher. And if we look at the options are going to lose implied volatility. And you know what? I'll be sitting with a 20% gain after a $2 move, where if we move $2 lower, I'm sitting with an 80% loss. So, yeah, the probability of direction is high. My risk reward is just not very good. So do I want any exposure in that? No, I chose not to, right? And this is where, for many traders, hindsight starts to come in. Oh, man, I should have done that trade. Fine, I'd rather have the 20%. But in making a trade in real time, we don't have that benefit of hindsight, right? But anyway, this is the philosophy behind a challenge trade and how each and every trade is operated and executed. And sometimes what you'll see from me is if the risk reward's really good, but the probability of direction is not that great, I'll get in with a lower exposure. If the risk reward isn't the best, but probability of direction is really good, I'll up my exposure a little bit. But generally, the highest exposure is going to be when the risk reward and the probability of direction are both strongly in my favor. And, let's face it, it doesn't happen every day. I can't look and go, well, let's take this ticker symbol and which way is it going to go? All right, let's go trade it. That doesn't fit into this. It just absolutely doesn't fit into this, here overall. And so we could play that game, and overall we're going to have some gains and losses. But, this is the challenge philosophy. This is how I execute it, and we'll continue to execute it. And, it's what allows me to sleep at night. It's what allows me to have fun with the game. And, it's more importantly, what allows that each trade isn't make or break, isn't, I don't have to sit there and go, oh, my goodness, my stock just dropped 20 cents. What do I do? Or, it just popped $1. What do I do? Okay, what's my risk reward? What's my exposure? What's my probability of direction? I know I'm not going to pick tops and bottoms, and so I can go about it in a much more kind of even-keeled, kind of controlled manner. Thanks for hopping on. Have yourselves a great one. We'll talk to you later. Bye.